Welcome to TradeTheNBI.com. This is John. This report is for the 16th. Well, and there we had the continuation of the breakdown off of, what we saw, this short signal breakup, and then the continuation of, basically resetting into an oversold category. We're still not even there yet because there's plenty of room for the red to break down now. If you go a little much further and get down towards the 20 range, even particularly with the green, you're going to get a bounce back. May even be starting right about now, but basically this is that ABM green. We closed above it, which is right down there at the 64 range, and that gave enough support to push things right back up to, we're at 72-ish. So it's pretty much holding steady, and we pretty much filled back in pretty much the breakout that took place. I mean, that's all we've been doing is just going sideways, but we've had good range, so it's a trade-off. We can't object to that horrible, back and forth movement. It's not the worst thing in the world. And likewise, from the breakout, there's still more room on the NASDAQ, obviously, for them to come back. But are we likely to see that right away? Probably not. I think we still try to cross here. It's a little bit softer breakdown on the DOC. You can see, but still, you get a little double short configuration with that pop-up. So this could be just a little false buy the dip, and then we'll see if there's more pressure. Plenty of support from the euro standpoint, spiking way up here. Seems a little odd, simply because the likelihood of rates in the US going up pretty darn good, which is the antithesis of what you would be reading from this setup here. It's just a very funny thing, but when there's fear in the market, people fly to quality regardless of what it gives them, and in this particular case, not much of a return is what it gives them. And here we have oil pretty much backfilled all the way past this little one right here. So it's got a little more range to go before it fills in the next leg here, the positive extremes when it broke out. And it's got a little ahead of itself. Nothing too dramatic. We're not upset by it. And gold. Gold has the potential to really make a significant move, particularly if the year-end readings are still powerful from an economic standpoint, because there's just going to be no question that will drive inflation. The real question is going to be, do they continue with the, block immigration, those kinds of things, or do they start to squeeze the labor supply? As soon as the labor supply gets squeezed, that's where the real inflation is going to come from, and that's really going to drive where gold goes from there. So if we flip back to that daily chart, I think it's going to be an interesting one to see where we're turning. We still haven't dipped below the red line. We're very close. If we do dip below the red line coming here in the next day or so, then I would really expect that we're likely to face a more extended downturn spin. The fact that you had short-term buyers not going anywhere, you're now stuck with steel between the red cyan, which is continuation zone. So continuation is just continuation of further south. So those are the warning signs that you've got. The nice part of it is, though, the range has been increased, and that makes for nice intraday trades. So that's all we can do is go with what we've got and keep plugging away at it. As always, though, trade well. Talk to you later.